You're listening to Inside Real Estate, your source for all things mortgage and real estate related. The show that brings you all the hottest topics and insights directly from those who know it most. Now sit back and enjoy the show.
What's up, everyone? Paul Apostolakis. We are Inside Real Estate. Who's got their phone on?
You.
Oh, it's
You
me.
do, man.
Oh, my God.
Jackass.
We are Inside
start.
Real
Good
Estate.
start, boys.
We've got Salvatore Cusmano.
Good morning.
Good morning, sir. You look fantastic.
Thanks.
Brad Weisgerber.
Good morning.
You look weird. Today on our show, we have Joe and John Angel from Angel & Company CPA firm. You guys do all things CPA related, right? How's it going, boys?
Good.
Yeah.
Morning. Yeah, thanks for having us. We appreciate it.
This is your third time on the show.
It is.
We're not really going to talk about who you are. Everybody should know who you are, right?
Nah, I mean, I don't know. I don't know if they should
I
know
think
who
so.
we
I
are,
think
but
I'm with Paul on that one.
I think by now everybody knows who you guys are. Yeah, but basically you guys do a
Thanks.
lot of work for a lot of real estate professionals that are in the industry. I obviously everybody, right? But surprisingly, you guys actually have a big book of business that you guys do with real estate professionals like us, mortgage people, realtors, all across the board. So I thought it'd be interesting to come in at this point of the year because your lives are about to get absolutely nuts.
Well, it started already.
It has already
It
started.
has started. Yep.
When does that really start? Just curious. Like people thinking at the end of the year or like, hey,
I think full on buckle down times mid to end of January probably.
That's hardcore, but on your point, we do a lot of year-end tax projections
you gotta talk
in
to
December.
them. There you go.
Sorry,
There you
I
go.
see you guys.
There you go, buddy.
A lot of year-end tax projections in December,
Yeah.
but middle of January, we're rocking and rolling. The forms aren't even released yet, to even file. So a lot of people are like, oh, I got to get my stuff getting filed. H&R Block, TurboTax are like, oh, give us your stuff, we'll get them filed. Not possible.
Yeah.
And with the government shutdown, the IRS is currently closed.
Yeah, I definitely
So
want
keep that in mind.
I want to get into that.
Cool.
And just before we get started, I just obviously want to say thanks everyone to subscribe, Stitcher, Podcast, Detroit, IREpodcast.com, our Facebook page, all that stuff, right? I got to do all this stuff all the time. Okay,
I don't think Brad wants to even talk to you.
No,
now
he's
after
mad
what
at
you
me because
said
I
to
made
him.
fun of his shirt. For anybody watching, just please comment at Brad's shirt.
No,
yes or
don't
no.
comment on my
give it
shirt.
Give it a,
I like it.
Give it a
I mean, I'm not
thumbs
going to read the
up. Give it a
comments anyway.
thumbs up or
Brad
thumbs
looks
down.
good.
Yeah.
God,
Yeah, it looks good.
Not as
You
good
look
as Sal,
rested.
though. Not
No,
as good
I mean,
as Sal.
Sal looks great.
You can
So
never look
Fresh
as good as Sal.
haircut. Look
Yeah.
at this.
Sal and I
No,
worked
I went
out
to the gym
yesterday.
yesterday.
Sal's always put together.
We worked out yesterday. I'm
Not
not
always. Today?
I'm not feeling that great.
Not today?
Not today. No, how was it?
Disappointed.
We got the show today, man. Anyways, so let's get
Could've
back
got
to you
Brad
guys.
And we had the show.
So obviously, tax season is coming up. It's going to be pretty wild this year. A lot of changes. Obviously,
A
lot of changes.
Yeah.
That people might or might not understand. I know I don't understand it. I have no idea. I just trust you guys to do it. But I think it's important for the audience to know that there's a lot of things changing. So if you guys if in your mind, what are the biggest things that you guys are thinking about right now that are that's different from year over year that you guys are seeing?
Yeah, well, to start, you're hearing a lot about, you can't deduct your cell phone, you can't deduct your miles, that kind of stuff.
Yeah.
That's only if you're a W-2 employee. Those unreimbursed employee expenses are now gone for W-2 employees.
I
But
didn't
for
even know that.
realtors, 1099 realtors that file Schedule C or business return, you still have all the same deductions, except entertainment. Entertainment's now gone.
Really?
Tickets, golf,
Yeah.
that kind of stuff.
That's pretty
The-
tough. Bar tabs?
No, see, the meals
Meals are still
good.
good.
meals
Meals are good.
okay.
Entertainment. They got
And
rid
luckily,
of
most,
entertainment.
the majority of people, their entertainment is meals. So
Yeah.
it's not going to
Right.
totally crush them, but a lot of
So
people
Omega's
that,
okay.
Was it Omega's good?
Yeah,
Yeah,
we a lot of meals.
yeah. But those
North of 8 Mile.
yeah, those tickets,
Sporting suites.
the suites, stuff like that.
Yeah.
Can't do
you're
it.
trying to. The meals in those suites are deductible, but the tickets and stuff
Yeah,
like that are
right.
not. So
Got it.
So-
that's a big difference.
So back in the day, if you were W-2, I would write all that stuff off, right?
Write all that stuff off. There's a form, a 2106 form, unreimbursed employee
essentially-
expenses, gone.
No more itemization.
No, you can
still
still
itemize.
itemize, so that's a good
It just doesn't
thing.
make as much sense, does
So
it?
you either can take the standard deduction or you can itemize.
Which
okay?
is what this year?
Standard deduction for married people is now $24,000. For single people, it's $12,000. For head of household, is $18,000. Basically double from the prior year. Basically, so
Yeah.
you can have standard or you can itemize. But there's only 3 major things now that you can itemize. You have your taxes, so state, local income taxes, and real estate taxes. That's one. Mortgage interest and donations.
No,
Those three things.
And now those real estate taxes, and
Yeah.
estate taxes, that's capped off at 10 grand now.
That I know.
So a lot of people.
First and second homes,
Yep.
10 grand cap.
Yeah, I mean, for us, it's okay. For most people, but like California, places like that, they're going to have issues with that.
Major
right?
issues.
Major issues.
I mean, that's a
and
big
some of our
difference.
California clients, we can see it based on the tax projections.
Especially with the
on their
state
itemized-
income taxes. I mean, major
California's
state income
crazy,
taxes.
man. So you're deducting on the federal side. In the past, now you're not capped at 10. I mean, that hits that quick. Hits it very quick.
Something I get a lot of questions on, right, is people doing cash out refinances to pay off student loans. And they're like, well, the interest is no longer deductible on student loans. Is that true?
Now, the interest is still deductible, but your income level, I think it's 80 if you're single, 160 if you're married. People are over that income level
There's
pretty
a threshold
quickly.
once you hit
you
that
know,
where it becomes
where it's
non-deductible
not
is what he's
deductible.
saying.
Got it.
Yeah.
Okay.
And only 2,500 of the interest can be deductible. So it's not a lot.
So it is advantageous to roll that in depending on, rate differences and write off that mortgage interest
Yep.
as opposed to student loan interest.
Sure.
You get more
Yeah.
of it on your taxes.
Yeah.
And on mortgage interest too, real
Yeah.
quick, another
I was gonna
point,
bring that up.
right? So on new debt, you can only write off mortgage interest with the debt up to $750,000. Okay,
Run that through again. So explain
Yeah.
that.
so debt. So you take out a loan, $1 million house. You
Yeah.
pay mortgage interest on $1 million house. It's only the mortgage interest on the debt up to $750,000.
It's capped at the
It's
750.
capped starting in 18.
New debt.
Got it.
Old debt, the grandfather's debt, that's still at $1 million. And then on home improvements, you have to prove, so on an equity second mortgage or something, you have to prove that you used them for home improvements to take that mortgage interest. You have to now prove that on the old mortgage interest as well.
And that's a
Sounds
100
like
grand
a-
home equity line you're talking
How
about.
would you prove
On
that?
top
Sounds kind
the
of nightmarish
750.
for you guys, like having to prove all that.
Well, it's
go
not.
through
There's more, and you
receipts or-
hear, the new tax reform, it's simpler, this and that, right? I can tell you right now, and John will tell you,
Yeah.
much more complicated. My dad's been doing this for almost 40 years. He's never seen anything like it. The old 1040 was a 2-pager. Now you have, 7 supplemental schedules or something?
They said they simplified it, but they didn't. Especially, and we'll get into this later about the business.
Are you
There's a
saying the
new-
administration lied to us?
They simplified.
This is like being videotaped.
They simplified itemized deductions, right? Because it's just basically mortgage interest, donations, and state income tax and property taxes, right?
Got it.
They're basically making it the standard deduction so high that not a lot of people are going to itemize,
Right.
So that makes it where it's much easier to file a tax return.
So
I
in
mean,
that
even
sense,
before
it's
that-
been more simple.
yeah.
Prior to the changes of the itemization and the standard deductions, what percentage of the population do you think actually itemized versus taking the standard deduction?
You're saying the prior tax law?
Yeah.
Most.
Most people did?
Yep. Basically, if you had mortgage interest, you're probably itemizing.
Yeah, because
Oh,
he's
really?
figured
I
that
never did.
standard deduction was half of those numbers that I
Right.
told you, right? So if you go over that number, you're itemizing. Now that number's higher, so you're going to see less people itemize.
Yep.
Yep.
Got
But
it.
then,
Across the board, I
and
got it.
John was kind of getting into it. We talked about the business deductions as a realtor. There's a new one under the tax reform. It's called the Section 199A deduction. Basically, to simplify this, and we can get into a little more detail, you're getting a free 20% deduction off your new qualified business income taxable income. Okay?
So what do you mean by
have,
new?
So let's
so you
say
got gross receipts, you get a 1099, let's say $400,000 minus $200,000 of expenses. You have $200,000 net number.
Yeah.
You're basically getting a 20% rip off that number too. Just a new free deduction per the tax reform.
Wow.
For a
if you-
new
if-
business or for an existing or any
business, it's got to be qualified. So, like you said, we don't want to
QBI.
get
so
too
like Omega or
Omega's good. You guys are good.
And there's an
Yep.
income threshold,
Heaven.
and there's certain industries that qualify. There's these SSTBs. Some people, if you're
So many
over
acronyms.
415,000 income,
You got to do other tests.
you got to
and
do other
stuff.
tests. Or some people, CPAs, lawyers, doctors, they don't get the deduction at all.
No.
No kidding.
Yeah, but under 315, any industry, you're getting that 20% deduction.
Does
Just
Sal-
keep that in mind.
Does Sal have any SSTBs?
Man.
He didn't
If I
file
had to
his-
guess, I would say yes.
He didn't file his
Thanks, guys.
789.25.
Yeah.
Yeah, section
Overall,
125
'cause
HIV. STD.
We've thrown a lot out there.
Thanks, guys.
Overall, the new tax law is going to benefit most people.
You think so?
Yeah, because
Really?
overall, just the
I agree.
rates and the brackets are lower.
Okay.
You have a higher standard deduction. The child tax credit is doubled. Okay, they've
Which is
gotten rid
nice
of.
What does
Yeah,
that mean,
It's
John?
really nice for us.
Yeah,
So-
let's talk about that.
In the past, you'd get a
Have some
$1,000
babies.
credit.
Yeah.
Now you get a $2,000 credit.
Got
Per
it.
kid.
Credit
Yep, per
per
kid.
kid.
And
There's
credits-
an income limit there too, but per
Right,
kid,
yeah,
$2,000. I got 3 kids, $6,000.
That's pretty.
What about
nice.
illegitimate
Credit.
kids? Paul, I think you got like 7 kids, right?
Come on, man.
I'm just kidding.
I mean, if it's dependent, and it's
Take your
on your
shirt off.
tax return, and it gets accepted, it gets accepted, right? I don't. You know, if you tell me it's your kid and no one else is claiming that kid, I mean, I'm not going to argue.
So
you
let's.
know, I'm not-
I got a question for you. So I mean, obviously, everybody wants to pay the least amount of taxes, get the biggest refunds, whatever, right? So as a CPA, like, do you guys see some crazy stuff, like people like trying to like slide things under, like?
Dude.
We had a meeting yesterday,
Yeah.
Wild.
me, my dad, and my brother, and we said we want to be more conscious about what we let leave the office. Like, we almost want to audit the stuff that people give us.
Yeah.
Just
Which we
because
do,
people
basically.
are
Yeah.
aggressive, and we want to really make sure that people aren't trying to slide stuff under.
Yeah.
You know,
Like,
because
don't
it's
get us
our
wrong.
work. We're signing the tax
Right.
returns.
Yeah,
and we
no,
see it a
your
lot,
name's
Paul.
on the return.
We see it a lot.
I mean, we're
Paul.
trying to, you know, we want to save people tax dollars as much as anyone.
Yeah.
But also, we're not, you know,
Setting people up
when
for
we're
audits,
signing things
you
and
know?
things like that, you know, yeah, these are our clients, and I'm sure, you know, we have a good relationship. But I mean, let's say an audit happens, you know, they could just turn and throw us under the bus like it's nothing, right?
Yeah, they
You know
don't
what I'm
care.
saying?
Yeah,
They
it
don't care
doesn't
when
matter,
something
blah,
like
blah,
that
blah,
comes.
yeah.
So, yeah, we look at it, but yeah, no, we see some crazy
I mean,
stuff.
I feel like within the you can play within the rules and still do a good job.
I mean, that's the
right?
whole idea.
Legally aggressive.
That's what I
right?
mean.
Legally
Like,
aggressive.
if-
That's the approach. Within the gray areas, we can go here, we can't go there. I've been doing this almost 20 years. John's right behind me. I
Yeah.
think we know where we can go, where we can't go. At the end of the day, no one wants to get audited, so we're going to do stuff to not put any of our taxpayers in that position.
How bad of a nightmare is an audit?
It depends. I mean, Joe has
Depends.
more experience with audits than
He
I
gets
do.
audited a lot.
No, I'm saying like he represents clients that,
Never
that do
once,
audits,
but,
but because he's been in the industry longer than I have.
Yeah, for sure.
But
I represent people.
Yeah,
Yeah, I
but
get
what
it.
I've seen from experience, a lot of it depends on the auditor, right? Some are cool. Some will just accept certain
They're like underwriters.
explanations, things like that. Other auditors, I don't know what's wrong with them. I can get into a whole nother thing, but they
Yeah.
want to make it difficult. They want to see every physical receipt. And they just want to make some people's lives nightmares. And,
But
I
if
mean,
you
just-
have good backup,
Yeah.
right? You asked, is it a nightmare? If you have good backup, you took legitimate expenses,
Yeah.
you randomly get pulled, you present your stuff. I see a lot of no changes, right? Good, thank you. Talk to you
Awesome.
later.
You guys
know
did it
what I
right.
mean?
Yeah,
So,
yeah.
yeah. Keep that in mind.
So-
it's not always a nightmare.
And
So
that-
Oh, go ahead.
That actually leads me to something, because I was talking to Joe about, 'cause I get this brought up at a lot of meetings. People always ask, you know, well, what causes an audit? What happens
What's the
if I get an
triggers?
audit?
Yeah,
what
what are the
triggers?
triggers? Yeah.
You know, first off, they're random for the most part.
for the most part.
And then the other ones is red flags, weird items, right? If you have a $100,000 1099 and you have $75,000 in meals and entertainment,
so your
something
your
looks
work to
something,
eat, your work to
something
eat
looks
and
wrong, you know. So they're going to look into that,
Yeah.
you know. And then, you know, the number one things that they do look at is meals and entertainment, auto, travel,
If those are exorbitant
you
or
know,
like crazy.
repairs and maintenance.
out of line. It's
Yeah.
got to be in line with your income, with what you got going on in your life.
What would be like a normal range? Is it like a
Well,
percentage?
it also depends on the industry.
Okay.
You know,
a lot of
like
realtors,
you guys,
they
you guys
drive
have
a lot.
to do it.
There's miles.
Yeah.
There's those apps that track that stuff. I don't drive a lot to clients.
Right.
I'm from my house to my office back. Those commuting miles, those are non-deductible.
Right.
So it depends. Yeah.
And then
Industry
also
standards.
with as far as real estate and mortgage goes, you guys are meeting with people all the time. You're
Yeah,
entertaining all the
yeah,
time.
yeah.
Your meals and entertainment are going to be higher than, you know, someone who maybe works in construction and all they do is, you know, are contractors on the field, you know, something like
Right.
that.
Right.
So yeah.
I think a good question would be, because, you know, a lot of people who watch this are real estate professionals, like, come near the end of the year, right, or at any time, right? Like, what should you consciously be thinking about, right, when tax time comes, no matter it's June, July, whatever? What should you be saving? What should you be writing down, tracking, to make sure that, one, you're not going to set yourself up for an audit,
Well,
right?
well,
'Cause
one thing that comes to mind with realtors, because we see this all the time, someone just starts real estate and they like kill it. You know, their first year,
Yeah.
they didn't even know what was going on. They receive a 1099, you know, 300,000 plus, right?
Who is that? I wanted to see
just
that.
in general, like we just see it all the time. You know.
Yeah,
you know,
I get it.
And that money's coming in, no taxes taken out of it, it's flowing in. You know, you're,
like,
you're
man, I make a lot of
partying, you're
money,
going to the
yeah.
ice
Feel
cave, you know, you're
good.
feeling
Yeah.
good.
I'm going to do this
You
the rest
know,
of my
yeah.
life.
You're at
You know,
the ice cave.
save that money.
The ice
You know,
cave.
at least put 25%
Casinos.
of that away, because
Got
there's
to.
going to be a tax bill coming. You know, as far as income tax and then also self-employment tax, which is
Yeah.
Social Security and Medicare, that you pay that on your tax return.
Yeah.
And that's what happens a lot of times with these realtors is they don't prepare for
Right.
that first tax bill to come. And it's usually, there's only so much we can do once the year turns. And then going forward, we can set you up a little bit better. But once the year turns, our strategies are kind of limited.
Depending on income, gross income, if you're a realtor, put aside 20 to 25% of every commission.
Yeah.
I think the
That's a
bottom
safe
line-
rule of thumb, right?
I think the bottom line is if
Yeah.
you're self-employed or you're a real estate agent or you're getting 1099 or or even if you're a W-2, you should have a tax professional that you talk to set yourself up properly. Like regardless, like I think it's kind of crazy not to have that. I
From
know
the start.
From the start, and the
Yeah.
setup's critical. You know,
Yeah.
an entity selection. Are you a Schedule C? Are you an LLC? Are you an S corporation?
Yeah, how are
you know
you
the
setting it
rules
up?
with the S corporation. Are you not paying self-employment tax? Why? Do you paying yourself a reasonable compensation? How are you set up from the get-go? Are you paying your quarterlies? Keep in mind, if you pay taxes in the prior year, you're required to pay quarterlies. If not, you'll get an underpayment of estimated tax penalty. The penalties sometimes equal the taxes. It's crazy. I hate penalties.
Yeah.
Our job is so no one pays penalties.
Right.
Right.
Yeah.
So
Yeah.
yeah.
So I know back in the day I used to do like my own TurboTax, which was I thought I was doing a good job until
So you got audited, right?
yeah. No, I didn't get audited, but like I look back, I guarantee you I made 1,000 mistakes. And I think the price to pay to have a professional to do your taxes is like it will pay dividends in the
It's
long
crazy.
run, right?
I mean, it's like
Yeah.
people are like, well, I'll file this for $60. I'm like,
Dude,
spend
Yeah.
another
Don't
$200.
do it.
Probably
Yeah.
end up saving more.
Yeah.
Right. And
So-
getting a bigger
Correct.
refund.
I was
Yeah.
always
And
W-2 with like
but still, dude.
simple 1040 EZs.
You're
right?
also
But, like,
Rain Man.
No, I mean, I'm just saying though. Like I
Even
know
the
I
W2
know I
people.
screwed up because
Yeah.
I know I could have
I screwed
benefited.
up.
Yeah, because
big
you don't
time.
know. Maybe you put in those dependents. Did you have dependent care
Yeah, I
benefits?
mean,
There's a credit
geez.
there, stuff
Yeah.
like that.
If people listen to the first 5 minutes of the podcast and think TurboTax is still a good idea,
No, I filed mine
It's
once.
not a good
And
idea.
got
Not a
like
good
a letter
idea.
from the
It's not a good
IRS.
we're
idea.
just talking
like,
about these
a
new
year later.
regulations.
Yeah.
Yeah.
Jeez.
No, there's a lot. There's a lot.
Well, I
there.
mean, that's what we're here for. We're professionals, right? Yeah, I could go try to be my own realtor when I sell my home and, save the commission. I guarantee I'm not going to do a good job
Right.
at that.
Yeah.
I guarantee I'm going to miss out on my home. Something's going to happen, right?
Yeah.
All to save myself
Yeah.
money, but in the end, I didn't get the product that I wanted, So
Yeah.
I think
the
you got to use
cliche
your,
saying, do what you do best, right? I don't go in and tell the doctor how to perform the
Right.
procedure. They're doing what they do best. Let me do what I do best.
Right.
Yeah, nobody's attacked. I mean, just in the like 10 minutes we've been talking, I've learned like 100 things
Well,
that I didn't know.
I
right?
think if you are self-employed, right, now is the time to essentially consult your doctors to
I
see
would
if
yeah.
This is the especially
Yeah.
with that
But
new
it-
deduction because as we said, it's tricky and there's a lot of tests once you get over 315. There's a phase out from 315 to 415 taxable income. After that, there's a test. 50% of the W-2 wages or W-2 wages of the company or that 20% deduction. Or if it's real estate related, so you have property, it's 2.5% of your unadjusted, or is it?
Yeah.
Unadjusted basis. So no depreciation, no land. Right.
just-
I don't
like,
even know
there's
what
some-
you just
Yeah,
said.
yeah, but to
Yeah.
to simplify
That's why I
that
didn't want to get into it. We
is,
want to try to kind of keep it.
we have like
but
a-
saying, it's good to know.
It's
yeah.
tricky
Yeah.
and
Right.
it's manual calculations.
not
and
something
there's a
you
lot
can do
there.
on TurboTax.
Like, we have a lot
Major
of
deductions,
clients-
20% off
Yeah.
your bottom line. You get that net number down to 100. That's 20 grand free deduction. You don't want to miss that.
No, and a lot of people will. I think there's a lot of people
Yeah.
out there that are just going to do
Well, I think where there's going to be
deduction,
scenarios too. So we have a lot of clients that it's like, just a one-man shop and they make a lot of money.
Yeah.
And they might have an assistant or someone like that they just 1099 them or something, something along the lines. They don't put them on payroll. They say, I don't want payroll. I don't want to pay payroll tax, this and that. Well, once you hit a certain threshold, I think what this deduction is doing is they want people to have employees to kind of boost the economy, have people have jobs. Because once you hit that certain threshold, that 20% deduction is based off of your wages that your company pays people. So
What is that? What do you mean by that?
So you get a 20%
yeah,
deduction, right?
Yeah.
There's a
Now you make
test.
let's say you make too much money, that threshold Joe's talking about,
Yeah.
okay? Now it's a test. 20% deduction or half of whatever wages you pay people in your company. If you pay no wages out, you're getting no deduction.
Okay.
Oh,
You see,
got it,
Yeah.
got
they're
it,
trying
got
to
it.
get people to put people on payroll, not just
Right.
1099 everybody. And really, that's the right thing to do.
It's the right thing to
They're
do,
full-time employees.
Yeah.
That's why, if you're thinking about getting into business, like, why would you not, right? I feel like you should consult an attorney,
Sure.
right? Consult a CPA. And, there's other
Consult Jesus.
avenues depending on what your business is, but
Yeah.
you should have that all set up
Well-
right from the start.
Another thing, just because it happened recently, another example is, and we're not saying, hey, just talk to us about everything, but it's true. I mean, it comes down to your taxes. We know what's going on. These people get into certain financial plans, and they put a bunch of money away with a financial broker or something like that.
Yeah.
And they think, oh, I'm putting all this money away. It's pre-tax. It's pre-tax if you're set up the right way. And if you don't talk to us before you make that contribution,
sometimes it doesn't benefit you.
Doesn't benefit you.
You have to recharacterize it. Yeah.
No shit.
Yeah.
We're gonna have a conversation after this.
Well, I mean, let me just give the audience a kind of like we as professionals, as mortgage professionals, we look at taxes a lot. Like I know how to read a tax return. I know exactly what's on there. But the reality is when it comes to actually filing and figuring out the right place, preparing, it's a totally different animal. So as
we
much
just
as
know
we
how to
know
calculate income calculations for Fannie Mae, we don't really know
anything.
Sure.
Like what's section, what is it, 179 deduction on that? Well, I know I can add it back on a
Right.
I don't know how it got there.
Yeah, with certain underwriters, but
Yeah.
I think to what I was saying earlier, like right now, especially like if you are thinking about buying a house and you are self-employed, now is the time to really buckle down and get all that in line.
And just like us, I mean,
Work
we're in that
together
boat.
with us, and not
Work
that we're
together.
gonna,
I mean, just to be
like
fair,
collude and try to like figure. But hey,
No, I mean,
you
that's the
have
whole
all
idea.
these legitimate
business.
expenses. You might not want to claim all of them if.
I mean, let's use
You
us
wanna
as
buy a
an
house.
example. Let's
Yep.
use us as an example. In 2018, we formed a company. First thing we did was talk to you guys.
First thing.
We did was talk to you guys. We set ourselves up properly. You guys said this is what you're doing, and we followed it to a T. I mean, you work with Brad quite a bit, and like we've been on it, right? And even though we've been on it, it's like, are we doing everything right? And we're always talking to each other. But like, if we weren't doing that, we would be lost, right?
Yep.
So if you're a business and you don't have that, or if you're starting a business, or if you haven't had it up until now, dude, that communication with your CPA is really important, right?
And the service too, and you kind of said that we're doing it, monthly. We do provide bookkeeping. A lot of people don't know that about our firm. We have certified QuickBook Pros in our office.
Yeah.
So we do you guys on a monthly basis. We're going into your QuickBooks with Brad.
always
Preparing
talking to you.
a monthly profit and loss statement, so you can really track how your business is going.
Yeah, if you want to be serious about your business, you gotta have that.
You
gotta
do.
have that.
If you're self-employed right now and it's January and you are avoiding your CPA or
not a good thing.
putting off
That's
when
not
you're
the
going to have that
case
tax
based on,
conversation.
my emails and taxes.
I'm saying if you're that guy that's like avoiding talking to your CPA or avoiding getting any documents over to them, you're doing it wrong.
Right, 'cause you know that
You're doing it
big
wrong.
There's
coming,
people
you know you're
avoiding.
prepare, right?
Oh, for sure, because
There's
they
people-
didn't have the plan going
There's
starting the
people
year.
avoiding.
They're
like,
doing
how
it
am I going
wrong.
to show a profit? How am I going to show a loss? Like everybody's talking about
man.
how am I going to show a loss,
Right.
or I made too much money. Like there's so many different things, right?
Yeah.
Sal, real quick, you brought up 179 deductions and depreciation. Another new thing I wanted to mention. So you own a business, okay? You buy a vehicle that's for business use,
Yeah.
right? New or used. If that vehicle is over 6,000 pounds, the gross vehicle weight. So a lot of SUVs, trucks, that kind of stuff, 100% deductible now. New
like a quick
and used.
depreciation, right?
Yep.
Yep, correct.
So,
There's
like,
a weight
gross
associated.
vehicle weight, yeah.
Wow.
Because it's I mean, you would think that
The dealers know, and they'll tell
It's
you
for
'cause
like
it's
trucks,
a selling point.
stuff like that.
you
SUVs
quick
will like,
depreciate it, right?
correct.
I want to buy a pickup truck.
That's really interesting. So if you actually have a heavier vehicle, it's a better thing for tax.
Yeah,
you
they're
get up
trying
to
to-
18,000 if it's just a normal car in that first year.
Yeah.
Anything heavy vehicles, you get the full.
That's
thing.
on the sticker, right?
Yeah.
You can't
Well,
like,
every-
put a whole bunch of bricks in your trunk and go get it weighed.
Right. Well, I mean, you know, we can cross that bridge when we get there. You know? But,
Legally aggressive.
Yeah,
I don't.
Okay, I
That's
like
a
it.
thing. That would be quite an auditor if they said, "Hey, let me weigh that car of yours." you
Yeah.
know?
How many taxes have you guys reviewed that people did on their own in the past that they said, "Hey, can you take a look at these? I got audited, or I
Like a
I
Chad
owe
tax,
money."
Chad really tax.
Right, and all of a sudden you look at it and you're like, "Dude,
Right,
what
I
did you
see
do?"
why.
99.9%, and I'm not just saying that. Typically, if we're looking at something that someone's self-prepared, we'll find something and something major. A lot of times, even if another accountant's done it, we can usually take a look and point out some different things that can be done.
Yeah, so I'll give you my example. Like I got smacked because I didn't do something correctly, and I was like, "John, I owe the IRS like 3 G's," and you're like, "Well, let me look at it," and you're like, "Dude."
We'll get rid of that.
We'll
We'll get rid of that real quick.
You idiot. 2
Something
seconds
along
later,
those
all of a
lines.
sudden, like I got a refund. It was like fine. It was like so.
And I think it's funny right now that you guys ask the right questions and you have like a almost like a questionnaire you send out beforehand, right?
Yeah.
Which allows you to essentially know what you need to collect to finalize a return. And I feel like when I did my TurboTax return, right, or I went to this tax wizard, quote unquote, on.
Was he a wizard?
Yeah,
8 Mile.
basically.
South.
Yeah. I mean, it was it was
Sleeve of wizard.
crazy.
Yeah.
But I'm like, so you're a CPA? He's like, no, dude.
No.
Just blowing the dirt. While
Another
they're-
thing, be
you know.
careful though. There's a lot of tax preparers out there, right?
Anybody can do
If
it.
you're
You don't have to
working
be
with-
licensed, by the way.
Yeah, if you're working with someone that's not us, great, no problem. But
Right.
make sure that they're a CPA.
Yeah.
Would be my professional opinion.
Yeah.
Because it's like, hey, I broke my arm.
I could
Do you want to
prepare
go to a
taxes.
doctor, or do you want to go to this guy who's not licensed performing procedures in his
No, you
backyard?
go-
shack in,
You know,
in
That's
the
like
mall. Like,
you go there if
Yeah.
you're like a criminal and can't go to the hospital, right?
Right.
Like you got to go to
Right.
Yeah, I don't think the audience
there's
knows
spots
that.
like
By the
that.
way, I don't think the audience gets that. Anybody can prepare taxes.
You
Legal-
can sign
your
up.
own.
Anybody can. I can do it.
Self-prepared.
Yeah,
Yeah.
anybody can do it. So,
But typically, like when that happens, right, you get a letter from the IRS. Hey,
Yeah.
you were
Unreported
insured or
income,
whatever, health insurance, and you get this
Yeah.
thing, and then you got to amend them. And it's
Yeah.
God.
And the way these things are going, those letters from the IRS, so much more of this is electronic, right? Things are being
Yeah.
submitted electronically, 1099s, 1098s, whatever it may be. If you miss something, they're
already know.
really starting to figure that out quicker, and you're getting those notices. So keep
Yeah.
that in mind.
They
Yeah.
they know what your wages and everything and all that stuff.
they
were
know everything.
being
brother.
before
reported.
you even file it.
It's being
reported.
So like if you don't file tax returns for X amount of years, they'll file it for you based on the
Yep.
After a
Just
certain
when
amount of
they're-
years,
yeah.
they will file it
crazy.
for you. And yeah, those non-filers out there, we can step in. We can request transcripts of everything that's been filed under your SOCH,
Yeah.
and we can help prepare those. So
Yeah.
keep that in mind too.
And that's the thing too. If you get behind, it comes up all the time. Don't let it go. Come see us. We'll get your stuff filed. We'll set up payment plans.
I think there's a
things
certain
like that.
level of
That's a
anxiety.
good point. Payment plans, we do a lot of those.
Yeah.
We do a lot of OICs, which
an
are
OIC?
offers and compromises. Offer and compromise to the IRS. You haven't filed. You got this big tax bill. Times are hard. And you can offer the IRS something, and they'll compromise and they'll
like a
settle.
settlement,
and
right?
they're
Yeah.
settling more than ever right now.
So here's something that happened to me. Like when I first got into the business, like I was like 23. Like I didn't know I didn't file taxes for like 4 years, and I had so much anxiety about filing my taxes that like I was like, I don't know, dude, they're gonna come after me.
Right.
So you create all this anxiety about the tax situation, and realistically, once I talk to someone,
Yeah.
they're like, oh, dude, you're fine.
So many
feel
people
better.
say, you know what? I feel
after
so much better that I
Yeah.
talked to you.
Yes.
And the communication, right? And that's we're pretty. Text us, email us. You have a
Yeah.
question about something. You guys know how it is.
Yeah.
Brad, you're in our office a lot with
Yeah.
stuff, right?
Yeah.
Yeah.
Yeah,
You don't
right
have to
there.
have anxiety about it. That's a good point,
Yeah.
Paul.
No,
There's a
it's
lot
true.
of
Yeah.
anxiety about it. When Brad shows up to the office, what's it like? I'm just curious.
Depends if he brought his pre-made bottle of liquor or not.
Yeah, I'm in there. We're sitting down, getting ready to go.
Jessica just looked up like, what the fuck?
Pulls out this.
And I'm not joking,
Yeah,
guys.
no, he pulls out this water bottle.
9 a.m.
It was, I don't even know. It looked like moonshine that like my wife from Bulgaria, the grandpa made, like this thing was all crinkled up and
that
hey, you want
anxiety,
something?
bro.
I'm like,
you want some?
Yeah, I'm
You're like,
like,
I don't know
I'm
what
all
that
good,
is,
bro.
dude. That's like
Smells like peppermint.
That's when I jumped in and took a shot.
We bad. Yeah. Let me ask you this: the government shutdown, that's a real thing.
Yeah.
Like,
Yeah.
and it doesn't look like it's going to end, especially from last night's
but
situation.
they are still accepting your money.
of course
they
And then it's coming out that the White House said that they are going to still be issuing refunds.
Oh, really? So the IRS is up. Isn't the IRS a
the
separate
IRS
We
entity?
can't contact them right now, though. We can't contact
But aren't
them.
they
So
supposed to be a
something
separate
important-
entity completely?
Something
It's
important
still-
for
it's
us
It is, but it's government ran. Like you go to the airport, like TSA.
Yeah.
Right. I was talking to those guys. I traveled recently.
Yeah.
They're not getting paid. Did you realize that?
That's
Yeah.
crazy.
They're all calling in sick because they have to
They're
go
not
they have to
getting
go work
paid.
a second
It's
job.
being accrued, but those poor guys aren't getting paid right now.
They're not getting paid anything.
They're
No,
not.
no, that's
and they don't even
wild.
know if they're gonna get the back pay when it does reopen.
Yeah, they
They
probably,
will,
They don't know for sure,
but
but
they don't
say
know,
they
yeah.
do. I mean, they got bills to pay.
Right.
Correct.
Right?
Yeah,
You're
not
going
everyone's
on
got
what
a
21 days on
savings,
Friday,
going
right?
on.
Yeah.
Hey, this shutdown's gonna get to a point where people are gonna start getting.
So
real
what
pissed.
happens? What happens if
It's time to.
the IRS is
Never mind.
technically closed right now? Right, they're not funded. What happens if IRS employees start calling in sick because they need to go work a second job?
Well, they're understaffed to begin with.
They're
You
under,
should
they're at
imagine
the
That's what I'm saying
lowest
to them.
number
Is that
of
true?
workers in the history of the
Is that true?
IRS
Yeah.
Yeah.
right now. Yeah, the president has limited
Why?
the funds to the IRS.
Oh, is that why?
Yeah,
Yeah.
I don't want to get
Defunded.
too
He cut
political.
their
but
funding,
yeah.
like-
Well, I will. He hates the IRS. Let's across
He
the
hates
board.
everybody
so-
but himself.
Relax.
Well,
I'm liberal.
Let's move
So-
on.
We're not going to go there. This
Yeah,
is
very-
a
I went
question.
there.
in
I
the
enjoy
middle.
everybody.
You guys want to talk about religion?
Yeah, what else do we got here?
So a question on our end, right? Like one of the things we need, especially for self-employed people,
Yeah.
is tax transcripts. Do you think that will be delayed or
Oh, yeah.
changed, or is that all electronic anyways?
A lot of them are electronic. That's interesting, actually, because we haven't had anything like that come up.
I'm pretty sure we can
Yeah,
still go in
and
and
pull
get
them
those
electronically.
electronically.
Yeah.
A lot of times I'll call the practitioner number and get the transcripts. I can't call call anyone right now.
No,
but we have a way to get them electronically
Yeah.
through some software, and
Got
I'm
it.
pretty sure we can still do that now.
Yeah, because for us, I mean, just on the mortgage side, that causes issues for us.
Because
we
that's
need
the only
transcripts.
real
kidding
way
me?
to verify the tax return that we sent to the underwriter was actually filed, right?
Correct.
Because they line
I
up
think
the
it's what,
numbers.
a
and they look-
4506, right?
Yeah,
Yeah.
that's what we
we get a
requested. So
4506.
people are always like, "Well, I gave you my tax return."
Well, no, we need
Well,
the
sure.
transcripts.
You know, I could
I
get
can
a
fill one
tax
out too
return
and give it to
software
you.
and
if it's,
go a little nuts.
Right.
But
Yeah.
it's like
I can put anything on there.
so that for us, like that's my main concern, I guess, because I remember a few years ago when there was a shutdown. I think it was like 2013, 2014.
We couldn't get transcripts.
Yeah, so it was like,
There was
all
a
these
shutdown
underwriters
then.
have to create like workarounds, right?
Yeah. Yeah, different kind of transcripts. I was kind of referring to the back ones, but what you're saying on that 4506T,
yeah.
I don't think you can get that proved right now.
That's
Wow.
why.
Yeah, that's
Yeah.
what I'm kind of nervous about. What's going to happen? What are lenders going to do when they can't verify these tax returns? Are they going to delay funding on these
Well, I
loans?
think,
Yeah,
it,
they're
but
not gonna
to your
find-
point,
I
if
know,
they're
right?
still
not
accepting
gonna
money
show
and
that. I
issuing
guess Fannie Mae's
refunds,
not
as
showing
long as
that,
it matches that bottom line,
Right.
Yeah.
you're
That's why,
golden.
and the president was
Yeah.
talking about a
A lot of times
national
they just wanna see that
emergency,
payment.
right?
Yeah.
Yeah, just so the audience understands about the 45060. Everybody thinks that their tax return should be the end all be all. We verify everything.
Yeah.
Like everything gets verified on a mortgage transaction.
Post 2008, right?
Yeah.
Makes sense.
Yeah.
Pre
Yeah.
2008.
Pre
Not when Paul
2008,
first
I
started
was
writing
there.
it.
and
Yeah.
Print me a
Stated
W-2
income,
with
and
whatever,
yeah, we're.
That's when Paul was partying out in Greece, man.
Yeah.
Paulie Hronis was
I made a lot of money. I didn't know any better, but I made a lot of money.
a lot of people did, you know?
So that's interesting, man. So like, what do you guys see? I mean, do you guys see any more changes? I mean, there's been a ton, right? Do you guys see anything else
always
changing?
changing.
It's always changing year by year, and there's new forms being released. This new reform, some stops at 2024, some stops at 2025. You know, new regime comes in. There'll be a whole brand new tax reform. Everything I talked about today might be completely gone.
Just like our
We
industry.
might
It
go
always
back to the
changes,
old
yeah.
way.
Yeah.
Yeah.
So a question, just because I think it's relevant in all of our industries right now, is the advancement of technology to make things easier. Like, if they're able to essentially simplify the tax code and the tax return to the point where you can self-file, right, and everything's tracked, your W-2s, your 1099s are all electronic, right? Like, do you feel any harm towards your business? I mean, I think maybe for like
I mean,
the
that's always-
Deductions, though, that bookkeeping, those businesses, you'll
Yeah.
always
That's
have
always
to
in the
track
back
the
of my head.
deductions.
But in the end, you know, a
Yeah.
lot of our clients are business owners, you know?
yeah,
So
no,
that's
it's not
their-
like you're doing your standard
Yes,
W-2. I think
right.
it would be probably
And
at a
we
point-
talked about it. We think a lot of those I mean, I'm just going to say it. A lot of those just standard filers, we might not have them come back this year because
It's
the
a-
standard
so-
deduction, they won't
it's
be
so high,
itemized.
Not
right?
that
Won't
we're
be-
cutting them. I just want to
No,
be
saying-
fair.
yeah.
Yeah,
You don't need me right now.
Right.
Yeah, right.
Yeah, I'm
'cause
just
it's
saying
super
it's not
easy.
like I'm telling them not to come, but we might not hear a call from them because of the new tax law.
Well, they should still
It has
call
made
you
it
'cause-
simpler for stuff like that.
They should still
you know?
call you because you guys are good guys.
Well, yeah. I mean, yeah.
So a
I like
buddy
to
of
talk
mine,
to them.
a really good friend of mine, is he sells tax software at Reuters. That's what he does.
Yeah, Thomson Reuters.
Yeah, so which is interesting, but I didn't even know they did that. But yeah, that's what he does. And I was asking him, I go, will the do you ever worry about the tax getting so simplified that it's like 2 pages? He's like, it's never going to happen.
Well, remember, this was the
could
postcard,
happen,
right?
but it'll
This
never
was supposed to be
happen.
the
Yeah.
postcard 1040.
Yeah.
That's what you heard about. I'm telling you right now, it's the most
like
complicated
7
form that
added
my
schedules.
father, who's been doing it almost 40 years, has ever seen.
Yeah.
So
I think in their mind, with the thought process, we'll make the deduction so big that people will just use that instead of everything else. But if you really are if you've got stuff going on, it's super complicated.
even if you are W-2'd, if you're commissioned, you know, if you are
Yeah.
part of a union or something.
Yep.
I mean, I don't know, right? But
Right.
there's so many things to evaluate. Yeah, if you drive to work and clock in and clock out at GM, yeah, it probably won't make sense to
Right.
itemize, right?
Right.
But
What's the biggest mistake that you guys see that people make on their taxes? Or some of them.
I don't know about biggest mistake. One thing I would say is I think people leave a lot of deductions out there. I
people
think
don't know what they can
They
deduct.
get
and we-
conservative on themselves,
Yeah.
you know, and there's just like a lot of expenses that they leave on the table. There's a lot of, you know, even like donations. You can have up to $500 in donations without having a receipt. So we put that,
non-cash.
yeah, we
right?
put that
So
on
something-
everyone's tax return, right? Why wouldn't we? If there's no thing behind it,
Everybody
you know,
donates $500
you know,
at
everyone
some point,
by the
like,
time they put it in,
Goodwill,
just stuff like
this,
that, it
yeah.
adds up. You know,
Yeah, and we have, and you guys probably have heard us say it, and John knows, we have deduction checklists, which are industry specific, that can you can run through and say, oh, wow, great, I can deduct that. Because that's the biggest thing that I see. People I didn't know I could deduct that. Yeah, do you use your cell phone for work? Okay, great. You know, are you at home working on a computer, right? Are you using that internet at your house working on a computer? Take a percentage of the internet. right?
Yeah, so think about the how complicated it is, and because of that, the government actually probably makes a lot of money off that because people don't really truly understand it, and they just overpay.
Well, you get scared, right? If you're not in the industry,
You get freaked out.
The thought of the
anxiety.
IRS
Yeah.
and stuff like that, it just probably scares you. We grew up in it, so I don't really think anything of it. I see a notice with a big number on it. I'm sure other people, their hearts
I'll
drop.
tell you,
know,
yeah.
You guys are like
it's
you
in
guys
it.
are friends on both ends, right? I
Yeah.
mean, the IRS and
I have
the
agents
consumer,
that I
right?
work with directly, absolutely.
You
and
build relationships,
And you
That's
know how to
where
talk
we
to
think
them.
they're
You-
the
you-
Grim Reaper.
Yeah.
But they're really not.
No, there's certain
They're
way you
just
can talk to
trying
them.
do
There's
their-
some great agents out there.
There's some great
Some of them
agents
hate
that
their
will
job.
work with you, and they're like, "Hey, here's what happened. Here's what we're gonna do.
Mm-hmm.
Can you work with us on the penalty? You know, oh great, you're gonna waive the penalty.
But
Thank you so
but
much."
the IRS is part. I'll give you a story. My parents, there's a accounting error. They owned a restaurant for many years. They really had a bad CPA. But anyways, there was an error, and the IRS thought that my parents owed $30,000 in back taxes. Well, it wasn't handled correctly over time. All of a sudden, 30 G's is gone from their bank account. They just yanked it.
yeah.
To
Yeah,
think
they'll
about that.
levy.
That's
Now-
why people are scared shitless of the IRS.
Now, to get to that point, though, there's
probably-
several notices. There's
sure.
notices to lien,
For sure.
notices to levy.
Yeah. It
They
doesn't
don't
happen
just
on- they
go
warn
in
you.
there. They,
Well,
correct.
Yeah, they didn't abide by it. But the CPA said you're fine. We kept on getting like bad information, and all of a sudden, my mom goes, "There's 30 G's missing." I go,
Right. That's a lot of money.
But someone just went in and took it out of your bank account.
Yeah.
Nothing will sink your heart to the bottom of the Atlantic
The bottom of
after it hit a huge iceberg
Yeah.
than going through your mail and seeing that IRS
Yeah.
letter, right?
Oh,
I
yeah.
remember
I got it.
Yeah, I've got
Even
'em
me,
up-
I get nervous. Even if it's like
Yeah.
a pin or something, it's just
Something.
you never like
yeah.
seeing
Those
it.
three letters.
Yeah. No,
I was
no.
living with my cousin, and he just sent me a picture. I remember I was at a bowling alley.
I was with you.
Yeah, I was, and he's like, send me. He's like, someone's been
Started
bad.
laughing at you, man.
I
And then you open, it's like, we've received your change of address.
Whatever.
No,
Yeah.
it was like,
Yeah.
it was that. It was the deal. Like you forgot to. You had
Yeah.
healthcare for like 30 days. I'm
Right.
like,
Yeah.
Yeah.
All right.
But yeah.
So
That's another thing on healthcare. That penalty's gone in
That penalty's
2019.
gone starting 2019.
Having
No more
presidents
penalty.
got rid of that, you know.
Obamacare is
You don't have to force
done.
yourself to
Yeah.
buy anything.
that's interesting. Do you think the healthcare premiums will go down?
No.
No,
No.
probably going to go.
I don't know.
who
Yeah,
knows?
probably not.
Once
a
you get
whole
punched in the
nother-
face. You can punch in
yeah.
the face 1,000 times. Doesn't matter.
That's
Yeah.
a whole other podcast,
Yeah.
right?
Another quick other deduction. So gambling losses. I thought I'd throw this in for Sal especially. You now can deduct your travel and entertainment on the like you go to Vegas. Portion of that can be included in your gambling losses.
Hold on a second.
Yeah.
What?
Now your losses can only be
Hold on,
deducted
hold
up to your
Up to
winnings.
the winnings.
So it's not like I'm going to like rip it against my own income, but
Hold on
you
a
have to have
second.
winnings.
So my flight and hotel cost 3 G's. I lost 5 G's while I was there. I can count that 3 G's towards the loss.
So what do
if
you
you
keep a
won
ledger?
8 G's, right?
Yeah.
Because it's against how much your winnings are. It just zeros it out.
It helps you. So if you have a big year gambling, as you do a lot, you need those losses. Keep
Probably
that in
on other
mind.
things.
Yeah.
yeah, Salvatore's actually not a big gambler, really.
No.
Yeah, no, I know. Just
he
loves
doesn't,
Vegas,
yeah.
so
He
I
loves
get
Ve- it's
confused.
totally
We were there for
different.
last
Goes there and
March
doesn't
Madness.
gamble. You figure it out.
Totally different. Yeah, totally different. Vegas is not
Still
for gambling
somehow
for him.
spend all my money.
Yeah, and win nothing.
You took it easy this
Wins
last
an
trip, honestly.
experience.
Yeah.
Yeah, no.
Especially in
pretty
STK. You're really taking it easy. You fell asleep
Yeah.
at the table.
Hey, it was people get tired.
Yeah.
Sal's a sleeper.
When Poole hit that shot, it just kind of changed.
Sal
the
hits a
whole
point.
Oh,
Sal hits a
Jordan
point. If
Poole.
he's partying, he just goes to sleep.
Yeah, nothing crazy.
It doesn't matter where
I
he
mean,
is.
I just
That's a
wanna go
lot
to
better
sleep.
than
Seen it
other
several
things
times.
that could happen.
Yeah,
Yeah.
yeah. He
Yeah.
sleeps. He's a sleeper.
One more thing, just because I was thinking about it, I had my sheet here.
Yeah.
I'm not sure how much time we have. There's
Tons.
another big change that the new tax laws brought in. It's called opportunity zones. And this is big for real estate people.
Opportunity zones.
Yep, it's called opportunity zones.
Okay.
And people are in the business of flipping homes or they invest in properties. And
Yeah.
there's capital gains on them.
Right.
You can. It's different from a 1031 exchange. If you invest in certain opportunity zones,
Which
so
Detroit probably has a bunch of them, right?
it's more than you actually think.
Wow.
You'd be shocked.
You'd be shocked. I looked it up. It's
Okay.
not just Detroit and Flint. It's like, I saw Rochester Hills. I saw if you're
all
just
over.
close to a certain type of income people, you can reinvest those capital gains in those opportunity zones, and you don't have to recognize
That's
them.
a big deal.
And
It's a big deal.
and
Like the
another thing-
1031 exchanges.
It's a big
it's
deal, yeah. But this is a big deal
But
because
this is, I think, easier than a 1031 exchange.
because you're just reinvesting it anyways. You
Right.
don't have to go
Could
through all
you
that title work.
1031 opportunity zone and avoid all the tax?
Well,
Yeah,
eventually,
but eventually
you're always
you-
deferring.
Yeah.
Right?
Yeah.
You defer,
Even with the
defer.
At some
Opportunity
point,
zone?
you pull profits. You're gonna
Opportunity
get-
zone, there's a couple things. If you hold it to a certain point, you might have to recognize a portion of it. If you hold it past that point, you'll have to recognize just the gain above what you invested,
Got it.
what a gain above that original capital gain that you reinvested.
So you
Got it.
deferred
Got
the
it.
original one.
Yeah.
And it's
Yeah,
gone.
yeah.
That's actually a big deal for all our investors out there thinking about it. That's a big deal.
And another big thing with that too is this one is on any kind of capital gain. You sell a business, you sell a stock. In the past, there's really nothing you can do with those
Nothing.
kind of capital
Yeah.
gains.
Well, yeah, and the new 1031, and it's only on real estate.
Yeah, not cars. People would do like kind exchanges.
Like kind
for
exchanges
business.
Can't do it
on
anymore. That's
different
all gone.
properties. That's gone now.
That's gone.
Okay.
Let me ask you this. This comes up a lot. So we do this a lot, and there's actually more and more homes are being bought like this because millennials don't have all the cash. They're getting gifts from mom and dad, and I get asked all the time. Like, my dad's giving me 30 G's for this down payment. What are the tax implications? And I'm like, listen, I know we don't report. I go, you need to talk to your tax guy. We do it all the
Huge
time.
question.
Yeah,
Yeah.
but what are the implications? If I'm a dad, I know there's only so much, like 10
So
G's.
if you're married, right?
Yeah.
You can get basically each person can give away to another person 15,000.
15 G's.
So if
Of
me and
anyone,
my,
right?
If
Or
me
does
and
it
my
have to be
wife
family?
give something, just anyone can
Anyone.
give 15. So if me
Annual
and my
gift
wife
exclusion.
could technically give my daughter eventually
Yeah.
$30,000
Yeah.
per year, and it's tax free, and there's nothing to do with the estate tax or anything like
Right.
that.
When you go above it,
Yeah.
Yeah.
And when you,
You
go,
go
above
above the
it,
30.
it just goes against your estate tax threshold, which is millions of dollars. Okay,
your
not
life,
your
right?
for your
lifetime
life.
state, and right
Yeah.
now it's $22 million.
Yeah, for a
Okay?
married
for a married couple,
couple.
11 million. So
I don't have to worry
$22
about
million
that.
estate. You gift over. You give the $30,000. You gave $40,000.
Yeah.
Oh no, tax implications. No, the $30,000 was part of the gift exclusion.
Mm-hmm.
That $10,000 now comes off your $22 million
So you have
plus
22,990,000
Exactly.
for the rest
left
of your life, and
life.
that's tracked.
Yep.
Okay.
I got it.
Yeah.
Okay, so that's interesting. So if I'm a
And
dad,
if I give $22 million in gifts,
If I ever have
I think I
$22
can pay
million,
the
hold on,
taxes.
hold on, guys. Here's my question though. Like, if
Man,
I
Paul kinda
gave my
shut everyone
kid
down there.
$80K to buy a house, right? I want to give him $80K, and I'm like, well, what are the tax implications? There really aren't none.
No.
There's no tax implications, like I said.
No.
You just have to track it. The what that goes over.
What
the,
happens if they don't? And this is just because I'm sure this happens all the time. I didn't claim it, regardless of what I did. I gave him 80 G's, and I didn't even.
You didn't file like a gift tax.
I didn't do
return,
any
right?
of that. Like, I didn't do anything.
I don't think anything would come of it because of, the only thing with those gift
I've
tax
never
returns-
seen a notice
Yeah.
on anything like that in the 20 years I've been doing it.
Yeah.
Should you file that gift tax return and report it correctly? Yes.
Got
Is
it.
there any implications to not the donor giving the gift, but the recipient of the gift? So say Paul is my dad. He gives me $80,000 to buy a house.
No, it's a
Do I have
gift.
to report
No,
that?
it's on him.
Okay,
It's a
so
gift.
okay.
Uh huh.
Yeah.
Yep.
That's
And
it.
you can receive as many as you want. It just has to come from different people. You can also give out as many as you want, but it has to go to different people. So Paul could give me 15. He could give Sal 15. He can give Brad 15.
Oh, for the exclusion?
just the nothing. Yeah, that's not going to touch
Got
anything.
it.
Yeah.
So it's only on the
It's
one
the receiver.
particular gift.
Yeah,
Got
that's
it.
interesting.
Yep, it's the
All right,
receiver.
we usually do 3 questions, but we're gonna do 2 questions for each of you. So it's a
Okay.
little thing we do. So
This is new.
this is new. So first question is, what scares you each? We do that almost every show.
What scares me?
What scares you?
Besides Sunday nights.
Yeah.
Yeah, Sunday nights the scaries kick in. I don't like heights.
You don't like heights?
Oh,
I
he
don't like
stole
heights.
mine.
Yeah.
I had it ready. I hate
Yeah.
heights.
Both of
I
you?
don't mind plane.
hate
I don't mind
planes,
planes.
I'm okay.
I'm cool on planes. I've never been on a roller coaster in my entire life. I've waited
on
in the
2.
line at Cedar Point for the Magna or whatever. Got up to the front and walked away.
Really?
Yeah.
Wow.
Yeah, you get me on the 3rd floor of Somerset, I'm staying towards the middle of that.
Yeah.
Shut up.
Yeah.
Really? I didn't know that.
Yeah.
My daughter's the same way too. It's weird. Yeah.
All right. Who do you like the most in your office? Pass.
My brother. Yeah, I'm gonna
my
go
bro,
simple
for
here
sure.
and keep this. I mean, the
Yeah.
Me Too
Wait, doesn't your
movement
mom work in
is,
your office?
is ramped. You know, right? So yeah, my brother.
What about your mom and dad?
No, honestly, right now we have the office has a really good thing going on right now. We love all our employees. We have a good team right now.
You guys have a really
Everyone
good
works
business.
hard.
Yeah.
It does get heated during tax season.
It does get heated during
Yeah.
tax season.
I
Yeah.
can't. How many just a number? How many taxes are you going to prepare? You think?
Individual.
What was it last year? You know the numbers better than
Yeah,
me.
I think individuals was 1,100.
1,100.
Right? I think our database we're filing over 2,800 total tax returns with businesses, personals,
Holy
and that kind of
shit.
stuff. Yeah, we got a nice big book.
Yeah.
20 plus employees. Angelcompany.com. Angel with 2 L's.
Yeah.
Yeah, feel free reach out to me or my brother.
Yeah, give the contact information right now so people
Yeah,
can know.
Joe at angelcompany.com. 2 L's.
Yep. and
248.
John Frank.
649-8720. Feel free.
Guys, honestly, and I can't tell you guys enough. Like, you guys really are the best in the industry. Like, I
Really appreciate that,
yeah,
man.
we
Like,
appreciate
you guys do. Like,
and, you posted something on Facebook. We got some comments from
Yeah.
realtors and friends. Appreciate all that
We do.
support. I really
we
do.
try our best. We
Yeah.
do take pride in it. It's a family business, you know.
Yeah.
So
Yeah.
we take pride in our work. It's not like I'm just.
Here's
you
the
know,
deal: you guys answer the phone, or you'll return a text,
Yeah.
and like there's a big difference
Yeah.
between that. And like, if I need help, you guys are there to help
For
us,
sure.
right? It's
Yeah.
it's really hands on. So
I
when you
give
get-
my dad full credit for that. He's really instilled
Really?
that communication,
Yeah.
client contact service.
He brought us up
Try to
that way.
return all your calls that day. I give my dad
senior's
credit.
a G.
Yeah, senior is a G.
Shout out to
Senior's a G.
John Senior. He
got
started
that
this whole thing.
He's got that platinum Prezi.
He's got that.
blue,
He's got that
baby.
nice office too, man.
Oh man,
Which is heaven.
half
Yeah.
the suite. How do you do that?
And he's only there 6 months out of the year.
No, so
He earned it.
Put in his time.
But he did earn it. He built this up. I mean, they started a freaking ping pong table at their own.
Ping
Yeah, but
house.
let's be
table
honest.
in the bottom of
But
the
it wouldn't be
basement.
where it's at either without the help of you and everybody at the team.
Yeah,
so
no,
you guys are
it's-
doing a really good
we
job.
have a great team. We
Great
love our
team.
employees.
All of our employees, all my
You know.
CPAs,
Yeah.
my admin team. Great
Yeah.
team.
Yeah,
Yeah.
I
So-
think that the takeaway from all this, right,
Yeah.
is evaluate who you're working with, right? I mean, if you hear good things about people, like take referrals, whether it's a real estate agent,
Yeah.
CPA,
Yeah.
doctor, whatever, right? And like
Try
get it
it- try 'em
together.
out.
I mean, you have personal health, you have financial health. Look at all of that and just get it in line. You
Here's
know,
what
if
I'll
you're a
t-
real estate agent,
Yeah, if you're
Talk
a
to
real
these
estate
guys.
agent and you know other real estate agents that are good agents and they're using X, you should probably use X. And you guys do a lot of work with the real estate
Yeah, we don't
community.
wanna drop
Ton of
any
realtors.
names, but
Yeah.
Yeah.
I mean, don't drop names. but I
Top
mean, they're-
top 100 realtors. I mean, I would
Yeah,
have
by
to
far.
say we're working with maybe 60%, 70%
100%.
in the state of Michigan.
Every time I talk to someone, they're like, "Oh yeah, the Angels." Yeah, I'm like, "Yeah, they're the best, right?" So if you're
Well, we
out there-
like you guys though. You guys are easy to work with. You guys earn money.
We have a good
You'll
controller.
take our advice. You know,
do have a good
mortgage
controller.
people and realtors in general too, and you guys specifically.
We listen.
yeah.
Yeah.
I mean, if it was me and
You guys
Paul, you'd be
listen.
like, "What is this bill?"
It's all
bro?
Brad, dude.
Yeah.
Dude, I was a side note. I was on the phone with ADP, right? Massive payroll company,
Yeah,
nationwide.
yeah.
The guy I was talking to at ADP knows the Angel Brothers.
Really?
He
We work
knows
with them.
of
We
their
have
company.
we have a joint
he knows
venture
of
with
them.
ADP,
Yeah.
payroll
It was cra-
processing.
it blew my
company.
mind.
If you have payroll and you need processing, if you come through
You
our
guys are
joint
soup to
venture,
nuts, by the way. Yeah, I mean, you guys do a lot more than just tax preparing, by the way.
Right. Yeah. No, we do a lot of stuff. I mean,
yeah, full
it's,
service. Yeah.
I like the full service.
Right.
Joe's got the best full service in the game.
Wow.
So
Moving on.
On that, any other questions? Anything else you guys want to talk about? So, okay, give your contact information one more time, website or whatever it is.
Go ahead, Johnny.
it's with angelcompany.com.
2 L's.
Yep, with 2 L's. Our phone number is 248-649-8720. You know, ask for Joe or John Jr. My email address is johnjonfrank@angelcompany.com. Joe, my older brother, is joe@angelcompany.com.
8 years. Did you guys know that?
Yeah, I probably
7.5 years.
For what?
I'm older
The
than
age
John.
difference.
Really?
A lot of
You
people don't know that.
you
I
can
get
tell.
a lot of. I
appreciate
get
I actually
a lot
think
of.
John's
I'm younger.
older.
Yeah, everyone thinks I'm older.
A lot
I had a
of I'm
tough
younger.
20 tough. I was rough on myself.
Hey, I do want to say congratulations, John. You've
Yeah.
got a baby girl coming.
I do have a baby girl coming.
congrats.
So
Thank
really
you.
excited
What-
for you.
Oh.
Yeah.
It's
Yeah.
been
We should have
awesome.
talked about that.
By the way, baby
gonna-
girls. I have a baby. I have a son and a girl.
Yeah.
My daughter, though, special place, brother.
No, I've heard that from
I
everyone.
got 2
you know.
daughters myself. Special.
I'm
Special.
done. I
For the
know
dad?
I'm done, and
Yeah.
you know it's good though. I'm ready to.
Congrats,
you know,
man. I'm really
take it on.
proud of you.
Appreciate it,
How are
man.
you prepared for tax season when he goes out?
No,
It's
he's
like-
I
it's
haven't
like-
talked about that.
he's not going.
I've
like
had-
4 weeks
I've
away,
had
isn't it?
3 kids. I never got to go out. So
I mean, we'll
It's a
make it
quick
work.
trip to McLaren and then back to the office.
mean,
Right.
yeah, no, we back each other up really, really well. Whatever he's got to do.
I mean, the baby's gonna come out in like 2 minutes. You just gotta show up for that.
Gotcha.
Okay.
Well,
You sound
So don't-
very
Aren't you
much like
bringing in someone from Bulgaria?
Yeah,
Like
my wife's grandma's
Yeah, no,
coming
this
in.
is true.
No,
This
this was kind of
A
my
doula?
ace, my ace in the hole.
Say this
Yeah,
again.
You got a
My
doula?
my wife's grandma flying in. She's
Okay,
originally from Bulgaria, Eastern Europe.
Yeah.
My wife's grandma's coming in, and she's going to basically, you know, stay in our house and be a nanny. So that's kind of like my ace in the
Man,
hole.
God
So,
bless you. Well,
I mean, it's my
that's a big
busy
win.
time, and you know, it's. I mean, she loves. First off, it's great to have
That's
her
gonna
here
be
in
a good thing.
general.
That's
and
gonna be
then,
beautiful.
You know, help raise the baby.
And she's
so
gonna
they
love
did.
it. You're
I
gonna
know
love
she'll
it, man.
it,
Well,
yeah.
congratulations, brother.
Thanks, man. I
Guys,
appreciate it.
thank you so much for doing everything you do for us. Thanks so much for being professionals. You guys are the best. I love you. I love you. I love you.
Yeah.
Hey,
love you too, man.
Love you too, bro.
Man.
So, all right, guys, that's our show. Thank you for listening. Please go to irepodcast.com, Stitcher, Podcast Detroit. You know what I really like? I really like Spotify. It's a really good platform. So if you like Spotify, go there. That's it. Play the music. Jessica, play the music. Play the outro. Play the music, Jessica.
Thanks, guys.
Thanks,
You've
everyone.
been listening to Inside Real Estate, the nation's top real estate podcast. Don't forget to follow us